Hi everyone, welcome to my YouTube channel. So today we are going to be talking about investing 101, financial literacy 101. So let's get into it, right? So first thing, you need to be financially literate. And for you to be financially literate, you need to learn how to budget, you need to know how to invest. So in this video, I'm going to be talking about how to budget, how to invest with as low as 5,000 naira, right? Also, I'm going to be talking about how to track your expenses. So let's get into it. First thing, before anything, we have to learn how to budget. Before you can say you are financially literate, you have to learn how to budget. Budgeting is basically forecasting. You are saying, I want my 10,000 naira to do this for me. That is basically what budgeting is. So I want my 10,000 naira to be able to take me to and fro to work this week. I want my 10,000 naira to be able to buy provisions for me for the week. I want my 10,000 naira to be able to buy perfume and some other things for the week. So let's get into it. So basically, budgeting is, as I said earlier, is basically forecasting, letting your money do the work for you based on a certain amount you are going to be looking out for a certain period of time. And so how do you budget? You can budget using, if you don't know how to, you can budget using various tools. I'll teach you through just having a notepad. So you can have a notepad called your budgeting notepad. You can do it on Excel template. But personally, I will tell you to use a notepad because that is going to be faster for you. Because before you open your laptop and start typing on Excel, time would have gone. Notepad can be in form of the notes on your phone. Like Samsung has a notepad. All phones have a notepad, you get. Then you can also use your book. Well, personally, I'll tell you to use your phone. So basically, if you use your phone, if you are spending, like if your salary is like 150,000 naira and you expend 150,000 naira in a week, you get. So as I was saying, I said if you have 150,000 naira, how do you budget? Basically, there's this budgeting rule I use, 50, 30, 20. If you are not married, the 50% basically means that 50% of your 150,000 naira should be put in an investment fund. 30% should be put in an high yield interest savings account, while 20% should be expended. So is that 20% you are going to be budgeting. So that 20% of 150,000 is about how much? Please do the calculate that. So it means, let's assume the 20% of 150,000 naira is about 50,000, right? It means that you are going to be, spend budgeting based on that 50,000. Means that on that 50,000 naira for the month, you are going to be going to work from that 50. So from that 50,000, you are now going to budget your transport. You are going to budget your feeding. You are going to budget your miscellaneous. Do you understand? From that 50,000 naira. That's what I'm talking about budgeting. So that 50, 30 to 20 rule is very important. Please write that down. 50, 30, 20 rule. It is very, very important in budgeting. So let's get into the next stage. So I said if you are earning 150,000 naira, you are doing 50% in investing, 30% high interest savings, 20% budgeting. This is for someone that is not married, someone that is not the breadwinner. However, if you are the breadwinner, you know it's going to be the reverse the case. So it can be 50, 30, 20, such that your own 50% will be what you are going to be using for the expenses, while 30% will be what you put in your high interest savings, while 20% will be what you'll be investing. That's for someone that is a breadwinner. And some people I always tell people to do the 50, 30, 20 rule. However, there's also a 70%, 30 rule, where that's for breadwinners. That means 70% will go for the expenses in the house, while 30% is what you are going to be investing. Please, you have to invest. So what are the various forms of investing? Before you can say you want to invest, you need to know your risk appetite. What do you know? What am I going to what am I talking about? Risk appetite is basically knowing whether you are a risk taker or you are not a risk taker. So you have to know whether you are a low risk taker, a moderate risk taker, or an high risk taker. And if you are in any of these buckets, there are also investment types for each bucket of risk takers. So for a low risk taker, it means you are basically going to be looking at investing in low risk assets such as treasury bills, commercial papers. I've discussed about treasury bills, so you can check my treasury bills video down. I talked about commercial paper. You can also check my commercial papers video. You can invest in commercial papers and treasury bills, government bonds. Those are low risk assets. Do you understand? The moderate risk assets are basically investing in ETFs, exchange traded funds. What do I mean by exchange traded funds? Exchange traded funds are basically funds, like a company would buy various buckets of funds. Do you understand? Various buckets of shares. So they can do a Dangote shares, an oil and gas shares, a gold ETF. Like they'll just put everything together in a bucket. So it's just like putting your funds in, putting various kind of funds together. Do you understand? So that your funds can be in moderate appetite. So you take the oil and gas shares, take the banking shares, take the agricultural shares, put everything in a bucket. Do you understand? That's what they call ETFs. And those are moderate risk profile. Then high risk, people that want to put their funds in do forex trading, cryptocurrency. Those are high risk. And shares, buying shares of small corporates, buying shares of volatile shares. We know shares are volatile, but so there are some corporate shares that they are not volatile. They don't move so up. They are just there. Those are the ones that are classified as moderate. But you that are investing in a small company, you know that you are taking an high risk, right? Thank you. So how to invest in treasury bills, I've talked about that. Then from low risk, if you are a low risk taker, right, you can invest in money market instruments. What are money market instruments? Money market instruments are instruments for low risk individuals, right? And this is such that a corporate like investment banks will invest in our money in commercial papers, treasury bills. Do you understand? So let's assume you don't have time going to the bank to get treasury bills. You can do money market. And I'm going to discuss the apps you can use in buying money market. You can buy from Afro Invest. You can buy from Stanbic IBTC, FSDH, Cowrywise. There are quite a number of Chapel Hill, Meristem, ARM. There are quite a number of asset management firms you can buy money market instrument from. And all this, also this asset management firm I mentioned, you can also buy shares from them, from their stock broking arm. You get. So, and all these, some of these apps is even like 3-in-1. For treasury bills, you can buy treasury bills from Bamboo. You can buy Nigerian stocks on Bamboo. You can buy foreign stocks on Bamboo. Do you understand? For stocks again, you can buy stocks on Afro Invest. You can buy stocks on Chapel Hill. You can buy stocks from Merry Trade. You get. So these are, most of these asset management firm has everything encompassing in them. And as I've mentioned, you need, anytime you're coming for my financial literacy, anytime you're watching this video, you need to come with your jotter. You need to come with your book. You need to come with your calculator, because you are going to be doing a lot of calculation. And also something to note when you are buying any of these things, money market, like money market now, the minimum amount of investment is 5,000 naira. So the minimum amount you can invest in money market is 5,000 naira, 5,000, and for 30 days. So if you know that you have money you are going to be spending for 30 days, and your money market account is the best, you just open the money market account there, then you put it there. Like for someone that I said 50-30-20 rule, 50% you take it to, if you are a low risk person, that 50% you just move the whole 50% to money market. Do you understand? The 30% high interest savings account, you can do economy, you can do piggy vest. Piggy vest is offering 14% on their piggy vest, 12%. Then the piggy bank is 14%. So you can do piggy vest and do piggy bank. Reason why I said piggy vest of piggy bank for high interest, because they have higher rates than the banks. Banks are doing 8%, 10% for their high interest savings account. So that's why I said you can use piggy vest. So basically that is the major thing. So I've talked about high interest, where banks you can use for high interest. I've talked about banks you can use for your money market. And you can also even put all your money in your money market account if you know that you are not going to be using it for 30 days. However, if you want to use your money before 30 days, fine, you can. Just that they will just take about 2% from the interest you earn. So that's basically everything about money market investing 101, financial literacy 101. Thank you very much. And so that's basically everything we are going to be learning today. Please subscribe to my YouTube channel and watch the videos on treasury bills, commercial paper, and this video especially. Thank you and have a nice day. Bye.